Welcome back. You're watching the newsroom with me, Karunya Rao. Markets have given up a bit, or rather extended their losses a tad bit more. Nifty is at 13,668 level, down almost 93 points as we speak. It's the likes of PSUs, energy, PSU banks, commodity and metal stocks which are putting a fair amount of pressure on the markets. But what is really bucking the trend, or is rather helping the market cap its downside, is Nifty IT, which is up about 0.8%. Pharma index is also trading with a bit of a positive bias, but definitely some amount of weakness has crept in to the market. Let's talk about some stocks on our Fatafat segment as well, the one which you need to keep on your radar. Despite the weakness in the markets at large, you have the likes of Kiri Industries that's flying away in trade. Do remember that the Singapore International Commercial Court had announced its judgment earlier today, on the back of which the stock has been gaining quite sharply. On the flip side, you have the likes of Tata Motors and Motherson Sumi that are declining, and how Tata Motors in fact is the top loser on the benchmark index. Fresh restrictions in the UK is something that the stock is reacting to on the back of new COVID strain coming in the United Kingdom. It definitely could negatively impact companies like Tata Motors, like Motherson Sumi, which have a significant exposure to the British market. Tata Motors gets about 22-23% of their revenues from the UK market. You have Motherson almost getting 40% from UK and EU region. So these are definitely some stocks that are taking it on the chin on back of this update. You also have a Colgate. They held their analyst meet quite recently, and that's the reason why this is a stock that we would like to keep on your watch list as far as the takeaways go. The market share in e-com and MT has seen improvement because of the kind of product launches that they've seen. They're driving profitable growth is the key agenda for the company. CLSA has upgraded their target price on Colgate to 1750 rupees. They maintain their outperform rating, but the stock, however, is sulking a tad bit in trade. They're also expanding oral care by raising category relevance, renewed core thrust, focus on expanding the oral care business. These are the key triggers according to CLSA. Transforming and strengthening go-to-market is also something that they are closely watching out for. Finally, another name from the consumption basket, a GCPL. That one is also actually bucking the trend and gaining quite smartly. Right now, the stock is up a good 2% in trade. There are some brokerage notes coming in there. You have JP Morgan on Godrej Consumer. They've maintained overweight. Target that they've given is 805 rupees per share. Positive narrative on domestic business is something that's keeping them upbeat. High NPD intensity, portfolio diversification are the key growth factors. Aiming for HSD to low DD revenue growth, they expect GCPL to maintain a good balance on the mix front, and they expect the management will ensure profitability going forward as well. They've given it a thumbs up. The street also seems like is giving a thumbs up to this counter right now.